What's happening, guys? Another Sunday scan coming at you, this time for Christmas week. I feel a lot better, probably like 90-95% higher end. Still just have that lingering cough. My wife bounced. She's a lot better. Kids are fine. So hopefully back in the saddle next week, 100%. I took a lot of time away from the desk this week. I actually think it was good because, for trading, it was a great week to be on the right side of trades and just let them work. So I was sized down a little bit as far as what I typically would trade, but there was a lot of kind of rechecks along the trends, and by being a little bit more away from the desk and maybe a little bit more size, it allowed me to let things kind of work for me, and not really be so focused on the micro type of moves. So we had Apple, T triple Q, we had an F trade. There was a lot of good stuff. And, obviously Friday ended up with the home run on ADGI. Thursday, I was early on ADGI, but it ended up working out pretty well because, I had to run upstairs and go, take care of my kids in the bath because my wife needed a nap. And that was kind of the curveball thrown in. And so when I came back up here, it was like $2 higher. So that sucked. But ended up having a really nice channel to trade out of, and had posted those trades in the Traders Lounge, so you guys could kind of see how I handled, being early on that starter and then getting that, nice channel kind of trade to get back what I could from that early loss on the trade. And once again, it goes to show you, if you're right, you scale in and you let the trade work. If you're wrong, you don't scale. You don't scale into a trade that you're wrong on. You have to wait for either a parabolic or a fail follow through type of setup. If you just put on a starter, do not scale and add. That is where a lot of people go wrong. And as you guys saw with the charts that I posted on the ADGI trade when I was wrong first, you could see that I just waited for that parabolic move and that post-exhaustion entry, the spot to scale. And I think that, where a lot of people get in trouble is they decide that they're going to start in, and then they kind of add, and then they add, and then they add, and they end up being part of that cover. And I think that it's most important to identify if that's you. Are you that stubborn trader? That was me for I don't even know how many years. But fortunately, I've identified that. I've been honest with myself as far as what I suck at, and it's been a huge turn in my trading by just really keeping it a starter and waiting for things to shift. And if they don't shift, then I shouldn't have any more size. And unfortunately, a lot of people will have their max size when it doesn't shift and it continues to grind. And then they end up being the perfect entry for somebody like myself who is patient and waiting for that blow off move. You had the same thing on SPRB into the close on Friday as well, where you've got this kind of slow, steady grind, kind of traps, comes back, slow, steady grind, traps, comes back, and then you've got this huge exit into the close, which finally was a parabolic move, finally was the exhaustion move, and it offered a really nice way to end the week on Friday. So hopefully we have more of that, but like I said, overall last week was way better than I kind of anticipated, and it really stems from the fact that I was off desk probably 50% plus of the time. I was outside some of the time, I was upstairs some of the time, I was around the house some of the time. So it was a little eye-opening. I would say that the silver lining in all of this was, one, mad respect for my wife, because it's a lot of work. It's a lot of work with two little rugrats running around. And then two, I have my routine. And I wake up and I do my routine every single day. And, I think what I realize is that I do actually have more time in the morning for things other than myself. And because I've really changed the way that I've been trading. and it's just all about patience. I don't care about this little micro kind of scalp there's definitely some A+ type setups and great liquidity in the morning pre-market. But my entire focus is just putting, a lot of liquidity. I need a lot of liquidity to put, my capital to work. And that's from 9:30 a.m. open until 4 p.m. There's no reason to be super aggressive at 6 and 7 a.m. Sure, there's those outlier days. And, without a doubt, there's, if AMC was going crazy or, we DWAC or something like that. But the majority of the time, it's just, is it really worth it? And so I like to get up early and look at, what's moving, get a feel for what the market's doing, look what kind of borrows I might need, locate a bunch of borrows if need be, and then kind of just check back. But I have a lot more time than I give myself. And I do find myself kind of like being this desk is a magnet, right? Once I'm here, I'm kind of here. So I would say that the silver lining is that break of routine definitely showed me now that I am not kind of glued to the desk or glued to trading pre-market or glued to the fear of missing a trade, that I actually do have a lot more time that I can pull myself away and be a little bit more present with the kids in the morning, which, I think that's good. But, I try to always look for the positive in these things. And, COVID was definitely not, something that I recommend. Fortunately for me, I got it super mild. So we'll see what the weeks ahead bring, but hopefully, the lingering cough goes away as well. But let's get rolling. Winners this week, Chris Mangacci and Stu Lyle. You guys have got the free t-shirts for this week. Just email me. We'll be giving away a ton of free shirts as always. I will wear either Scans or Icon Meals shirt next week, and then we'll give them away as well. And we'll get right back on the horn going with all the giveaways that we typically do. But the last couple of weeks were a little busy, and it was easier just to pick t-shirt winners. So, all right. I'm going to go over a looking left example in the first section or the second section of the Sunday scan right when I start to record my screen so you guys can see it. But that was the ADGI example as well as a bunch of others. And, it's just that repetition. And, I know a lot of people, it seems like an easy concept, and it is. But you need to understand the why, understand what makes these levels important, and it's really going to help your trading. I really think it will. And it's not always about the entry. It's about where to let this thing test until, where not to get bent, where does it confirm that your thesis is correct. So we'll go over that. Last couple things to hammer home. Patience. I'm going to continue to drill it. PFE is a great example. PFE was something that I was focused on Wednesday, Thursday, Friday. Wednesday had a couple good trades, nice, 40, 50, 60 cent pullbacks. And then it kind of reclaimed, did it again, reclaimed. Thursday was kind of just that steady grind day, so there's not really a reason to scale into the trade, right? Because it's just hugging high days. So Friday was the day that it came. And on the broadcast, I was talking about this is the exact trade where typically I'm upset that I didn't take that chance, which there was no edge with the chance, but it was down nearly $2 per share pre-market, right? And so there's a very easy way to just chase that, thinking that you missed half the move already and you want to catch the rest of it, right? And what happens is you do that, and then all of a sudden it rips right back up in your face. And you knew you shouldn't have chased it, but you did it because you were frustrated that you missed the initial move, right? So I mentioned that exact same thing because, old me would be leaning into it, knowing that I had missed it, but having that fear that I'm going to miss the next $2. So we had that opportunity where it swiped up and it went for the red to green push, and it failed, and it gave an awesome unwind throughout the day. So almost went red to green, and then down 2. So instead of chasing it down 2, you actually had almost the opportunity to get in at the same price as the prior close by letting the trade come to you, by being patient and not waiting or not forcing the trade when you kind of had that FOMO. You wanted to be involved, but you know it wasn't the right thing to do. Last 2 things to talk about: traders market. If you're having difficulty right now, I really think that it probably stems from having a bias, because this is a super trader friendly market. If you are trying to find the bottom on something and it doesn't bottom, it doesn't do what you thought, move on. If you're adding and it doesn't bounce, and you're adding and it doesn't bounce, and you're adding and it doesn't bounce, that's where a lot of people are getting in trouble. Same thing with something like AMC. And I think that AMC probably taught a lot of traders, about margin. And, when you are using money that's not yours, if you're just in cash, sure, you were down 30 or 50% in the last, 2 or 3 weeks. If you're on margin, you have no money left, right? Because you're using borrowed money and it pulled back, and, now you're margined out. So that's what a lot of that selling was. It's not necessarily that everybody's just completely unwinding and selling out and it's going to zero. It's forced liquidations. And that's what happens with a lot of these market moves and that's why they, bounce back so quickly, is because, a lot of times it's just this outlier unwind forcing everybody out. And then as soon as the selling stops, there's no sellers. It comes right back. And what happens is it comes back so fast that interest shorts, and then you get that secondary move. And you saw that a lot this week on different moves. So if you are having difficulty, review what you're doing, because this is a fantastic market and it's really rewarding traders that are joining trends and not fighting trends. It's fine to anticipate a trade with a feeler, but if you sit there and you say, well, I just started in, it's just a feeler, and it's half size or full size, then you're lying to yourself. So make sure that if you are starting into a position, you are putting a feeler on, it is a feeler, right? And so, for example, if you wanted to trade 10,000 shares, that is 500 or 8,000 shares. Nothing more, nothing less, nothing aggressive. If your goal is to have 10,000 shares and you started in and you have 5,000, that is not a starter. And with that said, if it starts to go against you and you go from 1,000 to 2,000 to 5,000 on the front side of the move, that is not a starter. So make sure that if you are participating on that front side of the move, it's a feeler only. For me, I have to be part of the move. I have to have a little bit on there just to get a feel, the vibe of what's going on. For some, that works. For others, that could be a really bad decision. So you need to know who you are as a trader. You need to know yourself. And if you know that you have a tendency to do the wrong thing most times, then avoid that starter. 2022 is right around the corner, so make sure whatever we talked about 2-3 weeks ago when I said don't wait for the new year to make your resolutions, don't wait to make changes. Whatever you haven't done that you were trying to do, make sure that you get to work this week and next. So last but not least, Mark Tennant had sent in a question that glad you're feeling better. It could be years or it could be next week, but do you have plans in place if the markets start to crash? Or what are your go-to stocks going to be? So you just had that. You just had a market crash. I mean, I don't know what it was, 1% off the highs or something like that. But to me, it doesn't really matter, right? You just kind of shift focus to volatility names, to stocks that are overextended, that are kind of unwinding. Then you start to shift into, okay, which ones came down the most, have the best chance of potentially bouncing? Where is the money going? And you just kind of follow the money trail. And there's always going to be a sector that's ripping no matter what the market's doing. So you need to find out where that money's going and put your money to work there. You need to find out where people are afraid and potentially fade that name or that sector. But volatility is all we need as traders. So don't be afraid to come in perma unbiased every single day like me. And you'll see on scan, I've got my game plans, but right now, look, if we're gapping up 500 points, then I'm going to scrap some of the ideas. If we're gapping down 500 points, I'm going to scrap some of the ideas, because we just need to know what's going on in the morning to get a good vibe for what is going to make that trade work or not work for that particular day. All right, guys, so for the second part of scan, as always, these are not buy or sell recommendations. This is for educational and informational purposes. If you're not okay with that, shut the video off. If you're okay with that, you want to learn what I do to prepare for the week ahead, then you're in the right spot. As always, please hit the like button and leave your key takeaway. Leaving the key takeaway with the timestamp of whatever it is that was like an aha moment for you helps us, helps you, and that's where and how I pick winners for scans, icon meals, IU, and the t-shirts, and whatever else we decide to throw at you. So let's get right into it. Like I said, I wanted to talk a little bit about looking left levels, and this was just sort of the home run type of trade. The levels that I gave in the room was the 1340 level. And then we had 14, I think it was 1420s if I remember correctly. I can get it right on there, almost. And then 1690s in the morning. And the reason why it was the 1690s was, if you look at pre-market, you can see that you've got a peak here at 4 a.m., 4:45 a.m. You got a peak here right before open, so you've got another confirmation high day reject at just before open, right, 9:15 a.m. And then you've got the pullback right at the open, which we always want to be super cautious of, because a lot of times there's weakness, and if they decide to support it, all of that short volume is going to be nervous. And when they shoot that back up, you're going to have a huge kind of surge, and whether or not it circuit halts or not, that's on you. Whether you're too aggressive or not, and whether you can go for the ride. So for me, sometimes I like to put a little bit on just in case, so that I can scale. But we got a nice retest back up towards the 1690s, which was the level that I gave in the room, looking left. Perfect looking left situation here. Let it exhaust out. Huge stuff move, as we talked about in the room, and then that was it. And had a fantastic day on that. The levels 1420s, 1340s was from the day before. So the day before trade, I put a little bit on at 10, and then it popped up, and so I started to scale. I think it was in the maybe in the 12 range or so, mid to low 12s, and then it continued to hold on. So I stopped out before 13, let it do its thing. We had an exhaustion move, and then I started to scale into the trade and was able to have some great trades using these channels throughout the day. So I don't forget those levels, because they come in useful the next day. And so that's exactly what we did. And as you could see, the tape changed again after it confirmed over here. You started to form another kind of base right here. And then after it did enough to, kind of work through that 1340 inventory from the day before, that was it. And it just, completely came apart. So I think it's going to be another great trader, but you just have to be cautious of volume getting thin and bias. So let's jump right into Monday, SPRB. This was another perfect example of letting everybody kind of find the top. So you had a couple spots where it started to kind of peak out, flush, got caught, peak out, flush, got caught. And then it did it again over here. So you start to identify, where it's starting to look like it could be a potential short. And the level that I gave in the room was 450. The reason I said that was you just draw a line right under where they're soaking it, right? So comes under, soaks back up, comes under, swipe back up, comes under, swipe back up, comes under, swipe back up. So to me, that says, okay, we need to be patient until 450 fails. So if you want to put on a starter, that's fine. But if you know that you are not good at putting on starters and typically you make bad decisions after starters, then you should not be doing that because you have to be prepared to go for a ride. So that said, we ended up having a nice little trap and then push right back up towards the highs. So I think that a lot of people came in, got short into the 450 level, and then they made them pay. And that's when I went and you saw I went short on this candle right over here at 560s. And it was just an incredible way to end the Friday because it was an instant, it went right down to $4.80 to $5 per share. So I am hopeful that it holds up come Monday, but it's a perfect example of, looking left, understanding that 450 was that base, and until it snaps under 450s, comes back and actually stuffs at 450s or fails a couple times and breaks away, that is your sign. If it just goes to 450s or under it and comes right back up and over it, that is not a confirmation. And a lot of people have that FOMO. They don't want to miss the pullback. They know. And then all of a sudden, guess what? We're a buck higher and they're stopping out. So that was a great opportunity. And hopefully we have a good opportunity come Monday. And, I think you can kind of see there was a seller that pretty much was aggressive in this 470, 480 level. So you can see the channel that's kind of forming. But for me, I would love to see something towards, 480 to 5 to react to. And hopefully it pushes up, gives some type of opportunity, and then it ends up unwinding. So I think that was all just a short squeeze. I don't think that was just natural buying. I don't think that that's going to sustain. Could always be proven wrong. Should be ready for both sides. AMC, another nice opportunity. The level that I was using in the room was the 2950. Oops. And you can kind of see the importance of that level. Each time, kind of peaked out over here, came back, comes back up, comes back over, and now this prior top pretty much becomes the base until obviously it came in. But really clean trader. I think that it just has this ability to just keep on trapping shorts because everybody just has this FOMO of missing out on the backside. And, it just always, it's so good at trapping those shorts. And like I said, I think that a lot of the selling was margin selling, so it's forced exits. And so when it comes back up, it's really thin. And I think shorts get involved and they add, and then they get blown out. So hopefully we get 30, 31, 32, something like that. Be cautious on the front side of the move, but the good part about this is the volume was massive. So you could really trade whatever you were comfortable with for the right reasons. You can't be fighting it with size, but if you see that trade set up, it's a great stock to take advantage of because there's a lot of liquidity. Had almost 150 million shares traded. So for me, it's higher the better, and hopefully we have some type of parabolic move and a reactive trade off the open. Otherwise, 9:45, 10 a.m. plus, let it kind of extend one way or the other. And as you've seen, I've gone long and short AMC lately, so I'm unbiased, just looking for that opportunity. PFE, this is the example I was talking about, and so you had this huge move on Wednesday, Thursday, and then this is where you're kind of bummed out because you're missing this trade because it's down 2 off the highs, and they had the call at 8:30, and then all of a sudden it comes all the way back up to 60, almost 61, which was about the prior close. So this is exactly what I'm talking about, being patient, because this is 9:40 a.m. So if you get too involved at 9 a.m., 9:15 a.m., right off the open, 9:30, 9:32, if you've got your blinders on, guess what? You miss out on this huge opportunity. So had it flushed out, yeah, probably would have been bummed I missed it, but I wouldn't have been, too upset. I would have been upset if I chased it and then I was down $1.50. I'll tell you that. So think about that before you make a trade. You're going to be less upset that you missed the trade than if you forced a trade and ended up on the wrong side. But 9:45, 10 a.m. plus, let's see what the market brings. This one has had a bid when the market's weak lately. So just something to kind of keep in mind. F has been, had a nice move after the CEO was like, buy the stock, don't sell, we're going higher. But, you can see we're still stuck in this channel. So I would be cautious getting too biased, above this level and below, right over here. But we're pretty much stuck in this channel. If we have one of those outlier days and it breaks under those 1940s, 1930 level, I think the key level was 1960 and 1930s, if you guys remember, every time we've talked about it. So that is where I feel like the waterfall would open up if it stopped, if it stayed heavy at 1930s. But so far, there's been a daily trade in it. Again, let's see what the market brings. But these are the 4 names that I know that I can put decent capital in. I don't have to worry about liquidity. And as long as I am not fighting them, they've been producing some really good trades. So let's move on to failed follow through. Failed follow through momentum is, things that not necessarily I am expecting to go, straight down, but I am looking for them to either overextend and then fail to follow through, or just have a week open and then fail to follow through. Either is fine. It doesn't mean that I think they're going straight down. It just means that I'm waiting for that setup to form. And as you guys see every single day, whenever I see it, I post it. And if that means that it's a setup for you, if you see the trade, then fantastic. If not, then you just kind of keep on compiling all those trades so that you can get a feel for how you can anticipate it yourself. All right, so GNFT, this one, all the writing was on the wall. And this is an example of one of those ones where they do the crazy traps. And I warned the room right over here about two minutes before or so. I was like, they're still toying with this thing. So, obviously be cautious with it. And, one thing to kind of keep in mind is, when you're trading, you should feel comfortable in the stock and you don't want headaches, right? So you've got these warning shots, all these huge wicks, all morning, huge move, another one, another one, another one. So that this has the ability to do it. So right away, if you see this stuff and you're sizing in and you're expecting this major move, you're being reckless because that this is the possibility of what could happen because somebody's in there screwing around with it, and every time it flushes out, somebody saves it, right? So it comes down. We know that 470 was that line. 470 was the key level. That was the one that I gave in the room. So 470, if it breaks and it ends up kind of coming back and reconfirming on the first try, that's not confirmation. That's no reason to scale in. That's no reason to be patient. So there should be no size unless this level exhausts out. And that, I feel like, is the difference in this market right now. It's just because it cracks a trend line does not mean anything. It's all about how it reacts when it goes back and tests it. And I think that's the biggest disconnect and why a lot of traders are getting trapped in markets like this, because they're anticipating this breakdown. Okay, phew, it broke. It's under it. I'm good. I'm safe. And then bam, first try goes right through. So keep in mind, when you're trading these things, for me to size, for me to scale into a trade, I need to see confirmation. Confirmation means comes back, stuffs into that move. There's a lot of other inventory above me now. There's a lot of covers that came in and exited. There's a lot of sellers that are now present. There's a lot of buyers that tried to buy the rebound and it failed. I want other people on the same side, trying to get out on the same side. For example, if I'm trying to short, I want to have competition on the offers from other sellers, from other people that are now stuck. Because if I am the only offers, then my risk is much higher. I want to be competing with people that are stuck. If you notice, you never have enough when you're right? Because people are always, it's always kind of coming down in front of you, in front of you, in front of you. You're not getting your fills. You always have too much when you're wrong. So think about that. ADGI, Higher the better. Ideally, we get some type of a push up. Not to put a million lines on this thing, but I would love to have it kind of basically retest towards 1175 to 1220 range. You can kind of see this channel that it formed. I would love to have it kind of push through there and give another opportunity. I think we're going to have some good stuff there. DNMR, DNMR. Higher the better. I do think that this could potentially unwind and be one of those that goes to 6 or 7. So I'm just keeping an eye on that. I will set price alerts. Nothing that I'm going to, come Monday morning and be like, all right, it's a short. This is something that, okay, it's down 10 cents. It's down 20 cents. I'll put on a little bit. Down 30, I'll put on a little more. Down a little bit more, I'll put on a little more. And just ride that trend rather than try to anticipate it. Next is continuation scan. This is the stocks that I'm looking more of a long bias. One thing to keep in mind, when that trade overextends, that's when the trade in my mind needs to be kind of reset. Your thought process needs to be reset. If it goes nuts, if it goes bananas, you should be obviously exiting into a major move. It doesn't necessarily mean all of it, but you need to let it reset and reset up as a new setup for a long. If not, that might have been the blow off and then that was it, right? Because a lot of these trades are just this big move, trap shorts, consolidate, squeeze them out, done, right? So what you want to see is this longevity kind of start to set up where, you've got this move, you've got this trap, consolidate, squeezes out, comes back, consolidates, starts to set up for a long trade again. And, I think a lot of people look at a trade and they start to kind of force that long bias if it was a long opportunity, and they don't think about the fact that, hey, the stock just went nuts. So PTPI actually reminds me of, I was showing this one the other day, NNDM, and I'm not saying that it's going to do this at all. I'm just, where have I seen this before? And you can kind of see very similar situation. And actually NNDM I had a boatload of, and Kathy Woods was buying this thing. And, it was one of those where I had so much stock and it was just difficult to hold it through all of this because they did these raises. And every time they raise, it was a huge breakout. They raise and gap down and come back, gap down, come back. And it was really frustrating, especially with size. And I felt like, they don't make this thing easy. And then all of a sudden, I'm happy to have gotten back, and then I just take it off so it doesn't happen again. And then it goes bananas. So I've kind of had the same feel on PTPI. And as you've seen, every Monday it pretty much gaps up and goes bananas. I think it's been a couple in a row, as well as other days. So this has been a phenomenal trade. Anybody that's paid attention, from early November when, I started the swing, there's been a lot of huge moves, but, there's somebody in the tape. There's an underlying bid, and you can kind of see that, there's, it's kind of grinding up off the lows here, right? And somebody keeps on picking it up. So volume's been good. We'll see what happens. But again, this is one of those, don't get overly biased one way or the other. You've had plenty of opportunities to take profits along the way. Like I've said, I probably should be selling more and then rebuying more. But I've just kept a solid core, and let's see what happens. I'm not going to be upset if it doesn't go, but if it does, then, I'm going to be really, really happy about it. ABUS finally kind of cleaned up all those sellers. It's been holding pretty well. Kind of rebounded, failed. Same levels as before, 430s, 450s. We're sitting right at the bottom of that one. Kind of cleaned up a lot of sellers. Like I said, there was a lot of buyers at 6. So it really sold me that, maybe this thing actually has a chance. So I've been carrying the core. I did downsize some into that last push, as you guys should, anytime that you have a position and it's got a big move. But ACET, Nice consolidation pattern here. We've talked about this one. Here's the wicks. I don't have a position yet, but you can see they keep on soaking it. We talked about it the last 2 Sundays as a potential long. Personally, I didn't get there, but I will watch dips first. 14s, FLL, nice setup here on the daily. You can see the setup that I like. You can see the wicks getting soaked. So I'd be watching dips. And 1220 is sort of that trigger point for the chart to start to firm up. EFRT, is that right? EFTR. Caught a typo. Nice breakout setup. 8, the trigger there. And last but not least, GRTS. Another beautiful kind of setup here. You can see why I like it. Look at the daily, and you can see we're coming up right on this like 14 area here. But I'd be watching dips versus 13. Maybe it's something that starts to have that, 14, 15, and then starts to go bananas, 17, 18, something like that. So those are watches for me. I am not long GRTS, EFRT, FLL, ACET. Those are just all ideas for potentials that I am interested in, chart setups that I like, just to kind of get you guys familiar with what I feel like looks like a good chart. Obviously, there's always the news. Obviously, check any catalyst. And then keep in mind, sometimes when there is a big gap up, that is it, right? So for example, M, right? Huge chart, ran into the earnings, and literally has not looked back since, which is frustrating because I was short a whole bunch this day. And I even said, I feel like it's going to gap fill, but that was like 10 bucks ago. I didn't touch it since, which is my own fault. But either way, have a great weekend. We'll catch you guys Monday. And if you guys have any questions, drop the questions, PM in the room. Happy to help you guys out. We have the Traders Lounge, so you guys can always just log in there and ask other members questions as well. It's been a really great resource. Lots of back and forth and people helping out and kind of navigating the website a little bit better for anybody that's new. But that's it. So we'll see you in the room.